Hello everyone, welcome back. So this is the next episode of our mentorship here. So this what you are seeing here is dollar card. Is dollar card as you can see on 1 hour time frame. On a 1 hour time frame, okay. So let us continue and finish this already. As you can see we have 3 candles. So there's nothing new here. You gotta sell that one. And for the breaking candle and for the fourth candle for the TP you need to, I'm sorry for the noise, you need to aim for TP3, okay, as TP1 as you can see, TP2 and TP3 is exactly TP3 you take your partials and you can trade your stop to break even, okay. But I don't recommend you doing that. It is just because the price might support and move down further. Okay, so next. Jesus Christ, what the hell is this? So, what really happened here is it went really more. So, you gotta measure this body, and then to TP1, TP2, and TP3. So, it's really went to TP3, as you can see. So, that's beautiful, right? The next thing that happened, after TP3, you gotta trade your stock to break even and take partials. Okay. Yeah, okay, after TP3, not the 2 candles, not for the 2 candles, but for the 3 candles. Okay, this one including this. You gotta take partials at TP3 down there. I mean, trade your stock. Afterwards, what happened? We found another black box here. 1, 2, 3, it didn't break. 1, 2, 3, it didn't break. Then when you actually zoom in here, that is not the black box. As you can see, this one didn't. The body is outside of that body. So the first candle's body. So that's not a black box. So you gotta see this one, as you can see here. This one didn't break the 2.5%. If it did, we would have sold that one up there. And look at that. That delivery to the downside. It would have been amazing. That would have been good, but that didn't break the 2.5% down there, so there is no entry. So all we gotta do is we gotta let me zoom out here. So really when you see this, as you can see it, and determine TP1 and TP2, most likely TP2 was not hit. It got really close but not hit, so we gotta aim for that. We have to aim for that. So what I would normally do in this situation is I would have sold this one. Actually, let us see the risk. The risk is too much. As the risk is too much. It is too much. So if these kinds of things happen, number one thing to do is to minimize your lot size by half or by 1/4. Okay. If you are entering one lot, you have to enter by 0.5. This one, if the risk is too much, or all the way, just don't trade that trade. Don't enter that trade at all because the risk is huge, right? or the other thing is to wait for the retest. Okay, you already know it broke the downside. You wait for the retest. Exactly right there. You watch for the weakness. Okay, for confirmation. What is a confirmation? We don't want to see this kind of big bullish candle. Okay, we want to see a red candle, and then afterwards we would say targeting down there. Okay, down there. Retest trading. A retest is beautiful. It's something. So you have three choices really. So next thing, what happened? This formed another black box 1, 2, 3, and then broke. I'm not gonna buy this one. Why? Just because look, stop loss down there. Entry up there, that's risky. Even minimizing my lot size, I will never enter this one. It is too much. So what I have to do is I have to enter at the retest where right there. Right there, I would have entered the buy. Why? Because my target is not hit TP1. TP2 is up there. So I would enter a buy down there, targeting up. Okay, targeting up there. So the price really went up. It did went up. The price did went up, but as you can see, after moving up, it collapsed, right? So I told you that once the price moves a lot, you have to put your stop loss from here to there, your entry, okay, to your entry. That's what you wanna do, and then after that, it pushes. Okay, after putting your stop loss, at break even, the rest is to take partials. That's all. That is all you have to do. Minimize your profits. I mean, take some profits off. Okay, unload. So after that, after hitting that one, you trail your stop up there, and your uh, you took partials right there and right at key levels. Okay, key levels. You can use key levels. Okay. So, or you can use your own judgment. Your own judgment. If price moves a lot, you take partials. Price moves a lot, you take partials. If price takes a high, this one, as you can see, I mean this one, I'm sorry, what was it? This one, you take partials. When it takes this high, you take partials. When it fills a gap, you take partial. When it fills a wick, look at that. It filled a wick here. As you can see it filled a wick. So you take partials there. Okay, if you want to know the key levels to take partials, okay, that's exactly what you should do. And then next thing, what happened? So this right here, what you are seeing is actually the false model. As you can see, this is a black box. Look, we sold and we bought. Finally, we delivered to the downside to where it first broke. Okay, the first model, I mean the first model moves to the direction where it first broke. Okay, to where it first broke. That's exactly what happened. Exactly what happened. Everything I'm telling you is happening every single day on everywhere. It's everywhere, bro. It's everywhere. It's different price currency pairs that I'm showing you. S&P 500, ES, Nasdaq, and I've showed you on US 30. It's everywhere. It is because it is how the market moves. It is how price action exists. It is how price action does things. Okay, that's why. Then next thing we found another problem. There. I told you that if criteria are met, we can trade every black box we find. We can trade every black box we find. So right there, this one, the body, you use a body. TP1, why? We broke to the downside. Just because we broke to the downside, so we gotta project our TP2 downside. Look, TP1, look what happened. Right there at TP2, look the price. But this week you are seeing here is the result of TP2 being hit. Okay, already achieved. So the price just after retesting it really came down to TP3 and even TP4, okay, down there. So those are key levels that you should take partials. So after TP4 you won't be able to take partials. It's because it would be off. Everything would be off because at TP2 you take 30%, right? At TP3 you take another 30%, 60%. Now 40% really is still running, right? Then at TP4 you would take another 30%, right? So what does that mean? It's 90%. So you don't only leave, you are left with 10%. So you are only left with 10%. Okay, so the 10% will move to your direction or still just like it did here. Look, it went down. So you can't do that. You can't do this. Then here what happened? Then here what happened? So right there we broke with this candle, right? Then we found we are not gonna enter a sale because the risk is too much. So it simply is not a no trade setup. This simply is a no trade setup. The only way we're gonna trade this one is if it retests. As you can see, it hits the block, it hits the black box, middle of, then I can now risk more. Now I can risk my money here to potentially gain TP1 and TP2 to potentially gain 2 times of 1 to 2 risk reward, okay, or even more. So exactly right there what happened. Exactly up there. That thing retested after breaking down. It retested. What does that mean? It means that is a sale. Stop loss up there. That's your risk. Your reward is this one. Potentially down there too. Okay. That's your risk. Alright, this is how you do it. The risk is too much. And then afterward, this another black box format. This one. 1, 2, 3. So this one I'm not gonna enter this trade. It's because it is very risky, bro. Look, the body and the body. This one we broke, showing us that we are moving down, right? So what happened? TP1, TP2. Look after TP2. Look what the price is doing. Okay. After TP2, look at what the price is doing. The price changed direction. So that's TP2 right here. The problem is this didn't came all the way back up, right here, up there. Yeah. If it did that, if it came back up there, I would have sold it. It will down there. Okay, tip it down there. That's a retest by myself. Stop loss up there. Actually, it's up there because this is high. So that's a sale. That's what the silver zone. This is what the golden zone. Okay. So if the price had came back up there, then I would have sold it, but it didn't. So there is no sell or buy anymore. Okay, it's because I gotta wait. I gotta wait. It is risky. It came back, but I have to wait. So finally, it didn't make it to there. So I'm not interested anymore, bro. I'm not interested. So I gotta wait for a new small black box, just like this one, and then trade them. Okay, simple as that. Right down there, right here, we don't have any black box. We got one here, but these three can use this bodies to determine the TP. Since we broke to the downside, so our TP will be down there. TP2, TP2 is down there. So all I want from this market is to trade up there. This is a black box. I'm interested. This is the area. So price is trading up, as you can see. So hopefully it might have came back up there. So that's exactly what happened. So, well, uh, nothing to waste the time on. Okay, as I said up there, I'm not interested in halfway. If the price comes back up there, and I would say my stop loss up there, and I would say aiming down there. Okay, simple as that. Simple as that. That's beautiful setup. The other thing is it's forming down there. So we gotta wait for more information. Next thing is dollar card is the same. It's the same thing. It is the same thing. So as you can see, it is the same thing, but it was still forming. This was still forming. As you can see, this was still forming. So I screenshot this to show the black box. I mean the force model. To show the force model, I screenshot this particularly to show you that there is a force model here. Okay. Because at that time I was focused on the classical black box. I didn't really add so much information on the two candles black box, so that's why, right? So when I finally found uh, informations, I mean additional informations. So the two candles black box made huge sense. I mean made sense. So that's why I'm focused on it. And risk-wise, it is very amazing. It's amazing. So that's why. So it's the same thing. So we don't have to do anything here. So this one means this one. Okay. Yet still dropping. So this whole thing was not there at all. So let's go to euro pound, euro GBP on 1 hour time frame. So let's go to this and let's finish this thing. Okay. So is there any black box here? No. There we found 1, 2, 3. Is there any break? No. 1, 2, 3. This one, including this 3. Is there any break? No. What about now? There. 1, 2, 3. Is there any break? Yes. Yes, that is a buy. Stop loss down there. Target, this is risk, this is target. 1 to 2, right? At least 1 to 2. So it really 1 to 2. 1 to 3. Okay. 3 1 to 1 to 3. So what happened? Did I show this thing before? It feels familiar, bro. It feels familiar. So it pumped up. That's amazing. So based off of these two candles, you can use your bodies to determine your TP3 and to take partials. Okay, take partials. And after that, after this candle closes, you have to use the third candle. Include the third candle and then TP1. TP2 is most likely up there, pump it up and hit TP3 even more. So we take partial at TP2, take partial at TP3. Now it is time for trail, for stop loss at break even. Then you don't worry about nothing. Don't worry about nothing after trading your stop option. That's exactly what happened. That's a beautiful setup. Then the price just made its way down. And really, where did it stop? Exactly rising at the silver zone. It really traded to the golden zone, filled the wick, and look at the delivery. I really don't know why they pushed it this far. I mean, after hitting TP3, I don't really need more from this black box. Not really, not much. That it is done. It's pretty much done. It is dead. Maybe there is some kind of black box before that we didn't see that is huge, that didn't hit GP2 but they're still loading. That might be the reason, okay? That might be the reason. Let me decrease the brightness a little bit because it's killing the battery, right? My phone's battery. So that is the only reason I'm telling you. I am telling you there is something. There is something. If you look closer, you will see some kind of these kinds of huge black boxes. Huge black boxes. That's why look, the price after changing direction down there, showing you the sign we are selling now. We are in a sell program, hitting that gap up there. Look, it delivered down. Why? It is because this down there is that kind of TP3 down there. TP1, TP2, and TP3 is down there most likely. That's TP4. Even went TP4. It really went overboard, bro. It's crazy. It is crazy, bro. That's crazy. So, anyways, that's exactly what happened. So this thing is pretty much done. I am not gonna trade based off of this. If only I have something, some huge black box before that, I would trade this buy right there. I would buy that shit aiming up there. And if there is a black box that shows me there is a TP up there that needs to be hit, that the price needs to gravitate to, right? So that if that is the case, then I would enter a buy. If that's not, goodbye. Okay, goodbye. Like this goodbye. The next thing what happened, we found another black box 2 3. Then it really broke. We know that we are in a buy program now, and that tip it was to be hit. Okay, based off of this body for this breaking candle, it is done. TP1 and TP2 look, and TP3 is really TP3 is even hit. That's beautiful for these two candles. But for the third candle, the full two candles black box is still loading. TP is still loading. Up there it seems like it broke the 2.5%. We really don't get. I mean, look, this is the body, right? So if that thing had pushed a little bit more, I would have believed that it would have moved. I mean, I would have thought that, I would have anticipated the price would move to the upside because this support could be a base, a start of big bullish move to the upside if that 2.5% was hit. But as you can see, it didn't really break it. It really went up, but not much. Yeah. I mean, it got too close. It's very close. But when you look closer, look, this is a grid. This is a little bit trade up. That's not 2.5%. We need a push to the upside. If that push had happened, I'm telling you, this price has a higher probability of moving up rather than moving down. Number one, we broke the upside with the third candle. Number two, we broke by the fourth candle. There is a difference. The third candle plays for these two candles. The fourth candle plays for the whole three candles. That is something. That is something right there. But unfortunately, what happened here is quite the opposite. It broke the the downside after some consolidation, which means we are selling that baby. We are selling that baby, bro. There's no hesitation here. I'm selling that one. Based off of this black box, bro. This black box, I would sell that one down there. Stop loss still up there. Targeting the wicks, equal wicks, not the bodies, because it almost has no bodies. These candles, they have no body at all. So you use the wicks, equal wicks, TP1, TP2, and finally TP3 and TP4. Really extend. It really extended the market. It is crazy. It is crazy. Then afterwards, I told you that after TP3, you have to put your break even. Your stop loss has to be break even, right? So, then the price will smash you up, but it took partials at key levels, TP2, at TP3, at TP4. So your share would be now 10% or less. It would be small. It will be very small. You don't get if your stop loss is hit or not. No, baby. Money is in my bag. So what happened next? We found another, I think, but yeah, this can count as a black box, but no one trades this shit, bro. No one trades this. Look, the stop loss down there and interrupt there. Actually, we didn't break the 2.5% at all, so there is no buy at all here. So we really have to consider waiting for another black box like this. And what happened? We traded down, we moved up. What is that? That's a buy. Boom. That's a freaking buy, bro. That's reward. This is your risk. Pretty much one to one, but it really moved. It really moved. So it's still one to one, but when you measure the body, TP1, TP2, it really went. I told you, it really went TP3. It really hit TP3. So normal TP3 is hit. If it is hit, so your stop loss has to be at break here. You took 60% out on this move. Now 40% is still running. You don't even care, man. You don't even care. Then the fourth model and the third model happened. This is the black box. Look, we traded up, finally collapsed. Okay, we collapsed. Why? It's because we have a reason up there. This bigger black box is still loading, man. So that pump dump has to be done. Has to be done. Unfortunately, we could not participate in this sale. It's because why? It's because look, stop loss and my entry, look, it is crazy. So I want the price to move up there. To move up there. I am entering that, but no based off of this, but my target is based off of the previous big black box. This is point of interest. This is my interest area, my entry area, but my TP has to be based off of that one. The reason I am entering this here is because of the bigger black box. This one. If this was non-existent, okay, if this black box was not here, I would not consider entering a sale on this black box. Never, I would never do it. I would never do it, bro. So, even I am entering this, if I get a like this, a setup like this, okay, retest, and then looking down there, otherwise there is no entry. So in this case, no entry. I gotta save my money, bro. I gotta save my money. Beautiful things happen here. Beautiful thing happen. 1, 2, 3. Bam. Is that a buy? It is a buy, but it's risky. So in these kinds of things, it's better to wait for a retest or to, I told you to use 1/4 of your what you would normally use. Okay, 1/4. 1/4 because it is risky. Okay, it is too risky. The setup is there, but it's too risky. Okay, this thing can play the force model, but it can break up, break down, then again break up and go up. So we cannot afford to lose our full 5% on this one setup. No, that's not our thing. What we should do is we can risk 1/4 or 1/2 of what we would normally risk. Okay, if 2% is at risk, now we risk 1%. Okay, simple as that. Look, stop loss is still bigger, so still pump it up. That's beautiful. So you use the bodies because it has a body. Bodies TP1 is up there, as you can see. TP2 is exactly as a candles cross, and TP3 is either TP4. Okay, beautiful. So TP2 and your entry is almost at the same area, so you don't take partials there, you take partials at TP3, then TP4. Okay, and then it pumped up. So this thing pumped up. Your GBP, right? That's crazy. Then we wait for another black box, just like I'm saying. This is not a black box. If it hit the 33.6% Fibonacci retracement down there, then we would consider this as a black box. But if it didn't, there is no black box. Okay. Then we would, anyways, we do not enter this one. I'm not gonna sell that one down there. It is because my stop loss has to be up there. No, no way. When I'm gonna say, when would I sell? It's only if I see a pump. Look, right there, if I see a red candle, that's right there is a sale. Since 2.5% is still not broken. Why? Look, this is the high. I'm sorry, up there. This is the high. Right? So look, little poke. We don't want that. We want a full balloon move, bro. A full balloon move. So it didn't deliver. This is so right here. So right here, if that was the high, then we would have considered this as to the upside down bullish. But this is high. It's quite different. So we need to see some big movement. So what does that mean? As soon as I see that bearish candle, I am selling that shit. Putting my stop loss just above that high. Simple as that, okay? And that is my risk, my reward down there. Let's go for this now. TP1 and TP2 is down there, so that is my reward down there. Okay, simple as simple play, simple second model play, beautiful. Until this black box TP2 is hit, I am still in play. I will still use the retest setups. Okay, the second model and the third model retests. They both have retests. I will use both of them. Okay, if TP2 is not hit, and additionally if TP3 is not hit, and if the stop loss and my entry are very small, negligible, I am okay if I lose that much money. If I am okay if I lose that money, how do interval aiming TP3? But if it is TP2, it can be a reasonable amount of money that I lose because it is TP2, it has to be hit, it is a must. So I would spend more to gain more, right? So that's exactly what happened right there. That's a sale based off of that high, okay? Based off of that high. But if it was based off of this high, the 2.5% is gone. But based off of that high, it is not gone. It's still loading. Still loading. Look how they immediately retraced back like touching a fire. They never wanted to change this black boxes program to a buy program. If the algorithm had pushed a little point, a small point, 2 points up, to the upside, this whole thing, you won't even see it. You won't even see this whole thing. This would have pumped up the upside without breaking it. Okay, supporting this low right there, because this would be what, some kind of third model. This is third model play. This would have been third model play because this is a black box. We broke, right? So we broke. So now we want this support down there and back. Simple as that. Targeting this black box TP2 is up there. Okay. But in order to do that, the 2.5% of this high has to be broken, which it never did here. What does that mean? It is a sale, a freaking sale. We are still in a sale program. Simple as that. Simple. There is nothing to complicate. So next what happened? We found out the black box 1, 2, and 3. What is that down there? That's a sale. That bullish candle and that red candle made broke 2.5%. You can measure it. They broke it. So what does that mean? I can sell that shit down there for my stop loss option. Okay, and targeting the bodies, the user bodies. TP1, I'm sorry, it's up there. TP2 and TP3. Actually, TP3 is hit down there. You can measure it for yourself. The three candles, not the first one. It's always the three candles. They are the players. They are the main players here. Beautiful thing, you trail your stop down there and you take partials at the key levels. That's TP2, that's TP3. I mean TP3 down there, TP2, TP1. You don't care about TP1. Uncheck the TP1 on your Fibonacci. Okay, you don't want that shit. TP1 is just a distraction. You don't want that. Is possibly, I mean, mostly it's your entry price. TP1 shows your entry price most of the time. TP1 right, that's your entry price. If you see TP1, most likely. It's not always like that. The next thing what happened, you found another plan was there, right? But does that mean no break, nothing? So I'm gonna look for another one. So, but I'm gonna use 4 TP projection, TP1 and TP2 down there, TP3 down there, TP4 down there. Based off of that black boxes. So based off of this, we got another one. The body, that's a cell down there, and targeting TP1 and then TP3. You take partial at TP4, you take partial. Your stop loss is at break even. Don't touch nothing. That is the best play you to get. Okay. Trailing your stop will have a negative effect because you would miss a lot. You'd miss a lot, bro. This thing would move indefinitely to the downside, like never looking back. So if you trail your stop here, look what would have happened. Look, it made a wick, right? So you are out. If it was up there, then you would write it down more. Right? As simple as that's the whole thing. Anyways, let's plan to the next one and let's finish this thing. The time is running out and I didn't eat my lunch. It's lunch time in our country, so up there we have a black box. As I said, simple. Targeting the body is TP1 and TP2 is down there most likely. That is down there TP3 and TP4. Look, it is crazy. So trailing your stop and taking partials are two totally different things. I mean, if you don't take partials, you make a lot of money if the price moves in a straight line. But if the price comes back, which it will most likely do, you would lose more than you make. Okay, it's better to take partials. It's better to take partials than to trail your stop. Okay, just to To not lose, you can put your stop loss at breaking, simple as that. That's exactly what happened. Beautiful thing, beautiful stuff here. You know what happened? We found another black box where I said 1, 2, 3. Is that a sell? It is a sell, but I'm not gonna enter it. It is risky. It is risky. No way, no thank you. So what happens is I'm gonna wait for a retest. Just like this one. This is a good retest. Look at the high. It really seems like it went and hit that 2.5%. I think it didn't. I mean, look at this grid. It is zoomed in chart. It is a zoomed in. It's not zoomed out. The grid, it protruded. This high protruded on that grid, right? What does this high do? It didn't even touch the grid. What does that mean? It didn't break nothing. It didn't break nothing. So, which means you can sell that shit. That's a sale. If TP2 is not, it's better to hold this. But I think TP2 is here finished, but you can enter a sell. I told you if your stop loss is very, very tight, you can enter a sell or a buy aiming TP3. I told you that, right? So what happened is it is TP1 and TP2 is most likely down. Simple. Look, after TP2, look what the price did. It really marched for this high and this gap. It filled this gap. Look at that shit. That candle's gap and collapse. So since it is only TP2 is hit, it's TP1 and TP2 is down there and TP3 is down there. Only TP2 is hit. This one. You can consider selling that one. Okay. You can consider selling that one. 2 TP0 which is down there. Selling that shit up there. Stop loss up there and reward down there. That is a crazy, crazy risk to reward. That's unheard of. Right? That is unheard of. Right? So anyway, that's how we play, right? That's how we play. Then what happened? Then what happened? Right there, this thing pumped. I mean, I have made another black box look, but unfortunately, I'm not gonna buy that one. You can buy this one using I told you 1/4 of your usual your usual amount, 1/4, because it is too risky. Look at this. This is risky, bro. This is risky. It mostly it goes 1 to 1, but it's not worth it. It's not worth it. I would rather enter the retest and aim 1 to 12 than 1 to 1. It is not worth it. So to make the mathematics work on our behalf, what we gotta do is we gotta minimize our risk. Simple as that. So we don't lose too much. Okay, and so what happened here? It found. Say you have entered using 1/4 of your usual amount, then it found. So it's a beautiful thing. So which means in this case you're gonna leave your stop loss down there, then you are going to take partials up there at TP2, most likely. TP2 is up there, most likely. So 30% off. The other 70% still running, and it will come down and hit, guide you out of the trade down there. So that is a problem of entering with this huge, huge black box. So the only way to do this is to you can aim this, you can see this one is TP1, TP2 is not hit. This is a huge range as you can see. TP1 and TP2 is not hit. Okay, what does that mean? It means I can enter the retesters. I can enter the retesters. Just like here. I'm not gonna lie, I would have entered that one. buy, aiming up there, okay? Stop loss still down there. This is my risk, this is my reward, right? That's good. That's a good one, right? Lucrative. Then unfortunately it's dumped and literally came close to my stop loss, and I would have added another buy. Why? I told you that one area of interest is our silver zone, and we have a reason that TP2 has to be hit. It's a must. The second area of interest is golden zone. So if price comes silver zone at least halfway, I told you that we have to buy it. If price comes to golden zone, that is even better. You will add another position, buy it. Okay, buy it with our normal lot size. Aiming up there, right? That's our entry. Sorry, what's our entry? Our stop loss is down there. That's our take profit. That's 1 to 15 or 16. I don't know, something like that. It's beautiful. Then the beautiful thing is it pumped and pumped and pumped. I told you that if price moves like this, put it at your break-even stop loss. But unfortunately, right here, it moved up. You can't put break-even your stop loss, right? And you can't take partials because that's quite a move. That's quite a move. That's quite a move. It's not a small thing. It is pound housing and housing pairs. They are like JPY pairs, like GG. Okay, like GG. They too much money. They require too much money. They give too much money. They lose you too much money. Okay, a people's words. One people's words is larger than pound dollar. Okay, GU than euro dollar. So pound Aussie, when I trade them, I gain a lot of money, and I also lose a lot of money if I lose. Okay? So that that buy has gave you some profits. So it's time to take partials and put it at break. The same thing here. Take partials and put it at break and stop loss. Stay pumped. Take partials again 2 times here, 2 times. Then after that, what happened? The price came back inevitably on its way. This is another black box, but didn't break. The another black box, it didn't break. The third one, the last one broke. That's what they said. That's what they said. What am I aiming? This one is a body. TP1, TP2, TP3. Stop loss at break even. Now take partials at TP2 and TP3. I am in a buy with this one. I say exactly right. I'm spontaneously I'm in a sales here, taking partials. So I'm managing multiple positions here. Okay, multiple positions. Beautiful thing. That is beautiful thing. And the amazing thing is it didn't hit TP. I mean stop loss here. Upset. That's amazing. That's beautiful. And most we are not interested. We don't care if it hit TP. I mean stop loss or not because our stop loss is at breaking. No one cares. Then we found another black box here. 1, 2, 3. Did anything happen? No. 1, 2, 3. Did anything happen? No. Did nothing happen? There, something happened. We broke. Stop loss out there. That's risky. I gotta wait for a retest. Gotta wait for a retest. As you can see, this is almost bodies. Bodies. I mean, wicks. So you can use the equal wicks as you can see. Equal the second highest wick. TP1, TP2, and TP3. That's exactly how it goes. So that's right there is what they say. Now one the price didn't hit TP2 down there. when you use a wicks because they have no body almost. Second, the price is in a golden zone. That's beautiful. That's the sale. Stop loss up there. A little bit up there. Why? This is a black box. This is a black box, so stop loss has to be up there. Sell. Then after the price pump it down, what do you do? What do you do? It it traded down, but what it didn't do is it didn't hit TP2 and it didn't move a lot. That is where it traded. Look. In the sell up there. Of course, we cannot get the highest high or the lowest low. Okay, let me say halfway. That's a sell. And after price pump it down, it opened and exactly moved up against us. So that is not, we cannot take partials, we cannot touch the stop loss yet. It has to move. In this case, look, in this case it did move a lot. Look, that's our buy, at least halfway, right? Look where it went. That's a huge move. And this one, consider this one. You sold halfway. Look where it went. Okay, that is where it went. That is where it went. This is the range. This is the range. Quite different. We have to move movement. We have to see movement. Okay. So exactly that pumped up. That is what another sale. I told you you can enter 2 times because we have the double bottom. It's scientifically proven. Of this, I mean, it's not scientifically, but years and years of my price action experience, years and years have proved it that the double top is one of reversal patterns. Look, this whole thing. That's a triple top actually. This is a double top. Look, equalize. Then Zachary, that's equalize. And making a double top, bam, collapse it. So that's why I tell you to enter 1 time, sell, and the other time, sell. Still stop loss up there, don't touch nothing. The first sell, the second sell down there. This is the first sell. Bam. Okay. Alright. Then what happened here? We have this is TP2. Just like I told you. This is TP2 down there. Let me put this thing there. Okay, that's TP2. Oh, that is your entry. That's your entry for that one. Stop loss still up there for both of them. Two of them still running. After this, sometime the price dumped. You can see dumped. So that's where you move. That's where you trade your stop to break even. And you take partial. The first partial down there. The second partial down there. The third partial down there. The fourth partial. Okay. Stop loss still at break even. Don't touch nothing. That's exactly how you play this game, bro. That is how you play this game. It's beautiful. And it is beautiful. That's amazing. So the first thing that I wanted to tell you was double tops and double bottoms. The reason that the price makes two highs or two lows is number one, to hunt the previous stop losses. Induce people. We are selling right here. We made the high, so everyone is buying, putting the stop loss down there. Then dumps. With that wick, it dumped, right? So now everyone is panicking. Now everyone is out. Exactly opposite. They are out. I mean down there. They are panicking. It keeps going down, so they think that it is gonna collapse. So they don't want their profits to be gone. to get, their profits to be blown, right? So they want to have their profits. They want to secure the bag, right? So what happens here is after dumping, they come up again. Okay. Now tripping the sellers. There are new sellers up there, putting the stop loss up there. Every high is there is money. There is money, bro. On every high there is money. That's the obvious place to put your stop loss. You cannot put your stop loss here because price, this area is football field. The price plays its football in this area, but not up there. Highs. Those highs are reserved. Those highs are reserved for future price hunt. So after this, stop loss, right? So now the price comes up, making a double top. Look, it is not exactly equal. It made like this, but it's not exactly equal. It is relatively equal. It's relative. This and this are not equal, right? They are relatively equal. So you cannot get perfect shapes and perfectly equal heights and lows. They are not gonna happen. Sometimes it happens like this one. Look, they are perfect. You cannot add anything on this. This is perfection. This is perfection. Look at this shape. Look at this shape. Look, the highs. This is crazy. This is algorithm. This is not buying and selling pressure, bro. I'm telling you. This is algorithmic. Some kind of computer is running this simulation, this program. So that's why we have rigid rules. Okay. Programs need to have rigid rules to work. It's because otherwise they have 0 and 1. That is all they are interpreting. Zeros and ones put in different ways. 0, 0, 0, 0, 1 on, 0, 0, 1 off, 1, 0, 0, 0, 0, something like this. These are all computers are reading. These are not. This is how they are calculated. This is how they operate. They operate like zeros and ones. It's simple as that. So they have to have rigid rules, two binaries, right? So that's why we have this rule. We have a rule based. We are a rule based. That's the whole scenario. What's happening? They put a stop loss down there. Sell side. The sell side or the lower highs. The lower lows. Or the lower lows, and then they put a stop loss up there in both ways. So they clear the both. Bam, bam. Both is cleaned now. Now they are the only ones who are selling this. Bam. But wait. Black boxers are here too, bro. Wait. We are already in a sell up there, bro. You cannot trick us. You can't. So that's simply it. So next time I'll show you about this one, the cardian pump. It is just fascinating. It's just fascinating to study these price actions. Like, it's crazy. There's nothing more than this actually. Nothing more than this. This is enough. It's actually enough. Okay? You don't have to scour the charts for hours and hours, years and years, and find out if Bitcoin is different than gold or US30 is different than Nasdaq. What is there? Let me find the holy grail. Oh my God, I need to find something else. Alright, I need to find a way to save my money. I need to find a way to preserve my money so I don't have to lose every single time. Okay? I win every single time. Not gonna happen. You cannot win every single time. You can't. You really can't. Number one, this even if it is a rule-based simulation, it is still manipulated. Big monies, they try to swing it, like the news when the news happen or something else. it is still being under control. Okay, you can change the parameters, you can change the inputs on the computer, and that computer will do as you told it to do, right? So people who have access of this machine, they will try to do whatever the big man is telling them to do. So in that case, your rules will break. Your rules will break. Okay, so you cannot expect 100% win rate. Okay? So it is enough, bro. Our 80% win rate is enough, bro. You don't need nothing more. You don't need nothing more, bro. You don't need, bro. Do you really need $10,000 per month? I mean, do you really, really need $10,000 per month? It is crazy. Most people live off that 2,000, 3,000, and 4,000. That's it. That's it. Even if you have a family, even if you live in the first world countries, you are still enough. That $4,000 per month is enough for you. I'm telling you. Maybe there would be some rents or something for car payments and I don't know, student loans or something else. But when you think about it, you don't really need $10,000. All you are doing is you are trying to accumulate cash, right? You want to control every bank. You want to have billions of dollars, even though that is just a paper that does nothing. If you reach a certain limit, if you reach a certain limit, what is the point of adding money? You are not going to lose that much money. You will not lose that $1,000,000. You don't need nothing more than that $1,000,000, right? And if you find a way to make a couple of thousand, to make 5 grand a month, and you already have millions of dollars in your bank account, why why would you want to have the holy grail, bro? You only live 90 years, bro. 90 years. There's nothing more. There's nothing more. The maximum 100. Some people might live to 120, 130 years, but after after 18 or 80 or 90 years, you are done, bro. You are done. You are done, bro. You are moving on a wheelchair, and you don't want to do that, bro. That's not enjoying. That is not life, bro. That's not life, really. That's not life. So if you have already accumulated enough money, if you have already secured the bag, if you have already a backup, if you have some property that you are renting and you don't work anymore, if you have escaped the matrix already, what is the point of trying to aim for millions of dollars when you could just make, say, $500 per day, when you could just make $1,000 per week? Isn't that enough? I mean, it is enough. You already have some other source of income, right? You don't work anymore. You are not chained to anything. Okay, you don't wait for monthly salaries to come from the government. You already have, you are already making money, even if even if it is small, right? So it's all, that's all everyone needs, bro. You don't need $1 billion. Trust me. That $1 billion is a nuisance, bro. It is a nuisance. You don't, bro. I'm telling you. Anyways, so what I'm trying to say is this is enough. You don't use the holy grail at all. Okay, this is enough. The surprise, the anticipation of the surprise itself makes life even interesting. Right? Okay. If you know, if you, if everything in the world is green, It is gonna be boring, bro. It will be boring. There has to be a yellow, there has to be an orange, there has to be a red color, right? There has to be a blue, there has to be different. Okay? If everyone is wearing a trouser, if everyone is wearing a sweater, that is gonna be a headache. So uh, when you see some kind of surprises in the market, even in the black box world, the false model might happen sometimes, and you would be shaken out of existence because what the hell is this? I didn't sign up for this. I didn't expect this. What the hell is this? Right? Something like that might happen, but so that's a part of the game. Okay, you might lose, and most of the time you win. That's what we want. That is exactly what we want. All I want is freedom. All I want is freedom. I don't need money. All I want is freedom. I don't want work anymore, bro. No work. No work. I don't want no one to order me to do this, to lift that one, to carry a stone, to build a house, right? To wash his car. I don't want to do that, bro. I can't. I can't. It just simply is not my. It's not my thing, bro. Other people can do this, but I can't do it. I can't. So all I want is my freedom, bro. I can't stay chained to this system. The system is crazy, bro. It is slavery. It is modern day slavery. Sorry. This is how you escape this thing. This is how you escape this thing, bro. It might seem boring at first. It might seem impossible, but when you push, and apply what I told you, especially on a demo environment. First thing is to raise that demo money to highest high you possibly can. And then after you spent some couple of months on that demo with a black box, with all of the things that I told you, after proving that, I'm not telling you to take my word for it. I'm telling you to take what I told you and prove it. Prove it on the market. Trading views everywhere. Everyone can access trading view as long as you have an internet connection and you have a phone, smartphone. You don't need a freaking big monitor, 24-inch, some big ass monster. TVs, that's not important. I still made that 45% profit based off of that classical black box, even that risky classical black box strategy. I made 45% almost made half of what I deposited, right? You can check it on my Facebook, it's all there. It's all there. And I'll show you the trades that I took. Some of them are insane, bro. It is insane. It's so crazy. Well, this is all that I wanted to talk to you. So I'll see you in the next one. Okay, thank you for watching. Peace out.